Welcome everybody to this week's video analysis. So I asked currency pairs and I would mark them up for you. So I am doing USD JPY and AUD USD. So we can mark our high, we can mark our low, but our low hasn't finished yet because it's still dropping. We haven't got a swing low. Here we have a swing low where it stopped and headed up. We haven't got a swing low. If it comes down, and then pulls back, that would be our swing low. And then all you need to do is wait for the market to either break, retest and take the market down, or push up, retest and take the market up. So it's still pushing down at the moment. So until we get a pullback, we can't mark our support. This was a previous area of support. Here you can see the market pushed up, pulled back here. It's also bounced off a support here, came close here, and now we're heading in this direction again. So, potentially the next area that it could stall is there. But this is on the daily time frame. If we go to the 1 hour time frame, we can see that the market actually pulled back here and started to move sideways on us a bit. So what does that look like with candlesticks? So we can see that the market came down, pulled back, dropped, around, pull back, for a potential inverted head and shoulders. Left shoulder, head, right shoulder, take the market back up. If we use something like Renko, let me zoom in just to make it a bit clearer. Okay, so to get our swing low, we want another red brick followed by a green brick. There's your swing low. Red, red, green. Mark your support. then all you do is you wait for the market to break through structure, pull back and retest, and then take your trade up. That's USD JPY. Or USD. We start in exactly the same way. On the daily, can mark your low, mark your high. We can see previously, the beginning of the year, the market came down to here and then shot straight back up. Okay, we're fractionally shy of that, with the market being currently here. Came down, tested this area again, and rejected. Okay, this is the daily time frame. If we go to our 1 hour, we can see that the market has started to put the brakes on. Left shoulder, head, right shoulder, take the market up. Go to your line chart. You can mark where are you? Ray. You can mark your ray there. You mark your low and you mark your high. Always know where you are in the market. You're here. Now you could mark it there, but because you've got structure just above, you could have it there as well. Now, the market breaks up, wait for the retest, take your trade up. The market breaks down, wait for your retest, take the trade down. If it continues in this zone, leave it alone. Some people, they will trade the bounces off inside the zone. Personally, I like to see a break of the zone and then a retest and then a continuation, either up or down. You see how simple this is? Guys, it doesn't have to be as difficult as people make it out to be. So let's just mark that area again. And this time we're going to go to Renko. So this is the area that we use with the line chart in prep for the breakout. Okay? So we haven't got our swing low point yet because we haven't had a green Renko brick. Okay, so we have our swing low. Red, red, green. Now, remember this hasn't happened yet, but this is what we would be looking for to happen, is this green Renko, which signifies swing low and then a continuation up. Go to the candles now. And what are we looking for? So price is in this zone. We're looking for the market to come up retest. Could be right on the line, it could be, you know, into this zone a bit, and then take the market up. Okay, so it's really, you know, it's really not as difficult as people make out. You can literally trade using Renko's, waiting for your swing lows and your swing, oh, I've done it again, waiting for your swing lows and your swing highs. I'll give you one more example. Swing high, green, green, red. Just imagine this hasn't happened yet. Take your ray, drop it in there. Candles. So the market pushed up, you're waiting for a swing low, the market comes down, retests, take your trade. So you would have had a drawdown of 25 pips, yeah? But look how much you would have caught. So, pretty simple stuff, guys. Pretty simple stuff. Remember, if you're trading next week, do manage your risk. Do not overtrade. Do not chase the money. If you enter a trade, don't sit all day looking at your phone, waiting for the money to go up and down, because that's how you get, you know, emotional, and that's why you end up either closing trades out too early and not giving them a chance to get into profit, or sitting on losing trades too long only to find that you end up blowing your account. So trust in your analysis, set your take profit, set your stop loss, enter your trade, walk away, come back when it's done. Okay, and thanks for tuning in. If you appreciate the video, do help me help others by liking, leaving a comment, etc. So we can help more and more people learn to trade with simple yet incredibly powerful strategies. Take care, guys. Have a great week, and speak to you all soon.